Hello, welcome to the European Open briefing for Tuesday, October the 25th. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So we've had another fairly quiet start to the day. The main theme in the markets this morning is it's yesterday's strong PMI data from the Eurozone and the US. We saw the Eurozone composite PMI pointing to economic expansion hitting a 10-month high in October. US manufacturing also appears to be well, with the PMI index hitting 11-month high. We had some fairly hawkish comments from the Fed's Charles Evans, who said he expects to see 3 rate increases before the end of 2017. And we also saw some moves in the Canadian dollar, and after some comments from Bank of Canada's governor, who said that rate cut decision should not be taken lightly. And this comes after a strong signal last week from the Bank of Canada suggesting that they could soon be easing monetary policy. So let's begin with the Eurozone flash PMI readings for October. We can see that all 3 indicators, the manufacturing, the services, and the composite is of course a combination of the manufacturing and services indices, they all beat analysts' expectations. The composite PMI rose from 52.6 to 53.7. In October, consensus estimates were for 52.8, so that's sharply above expectations. This is good news for Eurozone growth for the fourth quarter. The third quarter suffered a little bit from the Brexit shock, so we saw some slow growth in the summer months. It appears to be rebounding now. We've got manufacturing PMI at a 2.5-year high, the service PMI at a 9-month high, and the composite PMI at a 10-month high. If we look at the euro versus the dollar, we can see that the euro was sliding, and yesterday we saw that rebound following the release of the PMI data, though the small rally stopped just at $1.09. It's since eased back, though it does appear to have at least halted the euro slide, and that slide has basically appeared after the diverging monetary policies between the Fed and the ECB being back in focus, given that in December most analysts are expecting the Fed to hike rates, whereas the ECBs will likely extend its QE program beyond March 2017. Now let's move on to the dollar. We can see that the dollar has moved sharply above the 104 level against the yen. This comes after the strong manufacturing PMI for the United States. The market's flash reading for the manufacturing sector climbed to 53.2 in October versus expectations that it would stay unchanged at 51.5. We also had some hawkish comments from Chicago Fed President Charles Evans. He said he expects to see 3 rate increases by the end of 2017, although he did also say that the US economy has room to grow before inflation picks up. So again, we have the same language from the Fed, in the sense that although we'll likely see a rate increase in December, the rate path will likely be gradual. Now moving on to the Canadian dollar, we can see that the USDCAD pair we have got this spike downwards. This came after the Bank of Canada Governor Stephen Polo said that a rate cut should not be taken lightly. This is because interest rates in Canada are currently at 0.50%. If they cut it to, say, 0.25%, there's little room to go downwards beyond that, and then that would bring the bank closer to using unconventional tools such as quantitative easing. And he signaled that the Bank of Canada will likely wait 18 months before taking any decision. And this briefly boosted the Canadian dollar to 1.3273, although it's since fell back. We can see USDCAD recovered to back above 1.33, and that's where it's currently trading, around 1.3337. Another interesting move in recent days is the Chinese yuan. We can see the Chinese yuan has been falling against the dollar. It set a new 6-year low early today. This comes after the People's Bank of China set a weaker midpoint at 6.67744 per dollar. Although the People's Bank of China has defended its policy and said that it is not, contrary to market suspicions, it is not trying to depreciate the currency, and it's part of market moves, particularly given the strong dollar. And we had the deputy governor defending its policies today, saying that the yuan is stable. But we can see clearly in the trend here in the chart that the yuan has been steadily falling against the dollar in October. Let's have a quick look at today's calendar. The main data in the European session will be the German IFO business survey. The business climate index is expected to hold steady at 109.5. The current conditions index is likely to improve slightly to 114.9, and the IFO expectations index also to hold steady at 104.5. In the US, the main data will be the housing data from the S&P Case-Shiller price index, and after that we've got the conference board consumer confidence index that's expected to ease to 101 in October. We saw that surge back in September to 104.1. So today's data will be watched to see how well that figure holds up in October. Also to keep an eye out for is the Bank of England Governor Mark Carney will appear before the House of Lords Economic Affairs Committee, and later in the day ECB President Mario Draghi will give a lecture in Berlin on monetary policy. So that's he may mention something about the ECB policy, but we shall see. That's it from me. Thank you very much for watching and have a great day.